So in this video, I'm going to be talking about what no one tells you when you first come from a country that does not have a credit card system. So basically, a credit card, it's a payment card, right? That is issued by a bank, and it allows you to make purchases and then you pay them at a later time. If you pay on time, you pay no interest. But if you don't pay on time, you're going to pay whatever you owe plus interest. So how do you normally get a credit card? When you come here, let me say you come here, we're assuming your paperwork is straight. That means your paperwork, you're legally here. You have a social security number and you could work. You have working papers. You could get a job. And then once you get a job, and then the bank see that you're making money, you're like in the system already, they might send solicitation emails to your house. To solicitation letters to your house. And then from there, you could choose whatever company you want to apply to. Like, so several banks, like let me say three banks might send different solicitation letters to your house, and then you choose what bank you want to go with, and then they normally start you out small. When you say like $1,000 to $1,500, 2,000, just based on the job you have and how much you're making. That's what. But if you just have a little job, you just started, you normally start off with 1,000 or 1,500. But if you don't get those letters, or you don't want to wait for those letters to come in the mail, once you get a job, you could go to the bank. And when you go to the bank, you have to show them proof of income. And if you show them proof of income, maybe you take your pay stubs or you show them your pay stubs down your phone digitally, they will give you a credit card based on how much you make per year or per month. They're going to come up with something and give you a credit card. So this is just a system here that you use to build it's a credit system. Yeah. So you use your credit card to you need to build your credit because everything here runs on credit, right? So they give you this card, and when you use it, I advise you to only use 30%, 30% of your credit card, and you want to pay that at the end of every month, starting out just to build your credit, to show creditors that you're a responsible, accountable person. You pay your bills on time. So once this has been going on for some time, that's very good. So the different categories of credit, right? Different clubs. When you're in the excellent club, that's the best club, right? Because you get the lowest interest rates and you get the most value for your money. So if you take out a loan and you have excellent credit, your interest rates are going to be very low because they consider you very low risk. Then you have very good, which is kind of similar to the excellent credit club, but you get interest rates that are good, but not as good as the ones that are in the excellent club. Then you have the good credit club, and then you have fair, and then you have poor. You want to make sure that no matter what's going on, you're at least in the good credit club, because if you're in the good credit club, you can always get good interest rates, on anything you want to do. So you're working now, you've been working for a couple of years, right? You want to get your first apartment maybe, or you want to take out a loan to buy a car. If you want to get an apartment in this country, they're going to check your income. You're going to have a criminal background check, and then they're going to check your credit. If you really want to get into a nice complex or a nice place to live in, your credit must be at least good, most places. The better the place, the higher the credit requirement. So if your credit is good, you'll be able to get in. But if you have a good job, you don't have a criminal record, but your credit is currently messed up, you're not going to be able to get into that apartment. Secondly, you want to buy a car. Let's say you want to buy a car. If you have good credit, is they consider you low risk, so your interest rates are going to be very low. So you could take out a pretty good loan and then you get good interest rates on it. So like over the life of the loan, you're not gonna pay as much as someone that had bad credit. Like let me say your interest rate is maybe 2% or 3%. If you have good credit, the person that has bad credit, the interest rate is gonna be maybe 7% or 6.5, which is way more they have to pay back over the life of the loan. So these are just things you want to watch out with. You don't want to be reckless with your credit card. You don't want to have too many, and you only want to use them when you absolutely need to use the credit card. And make sure you stay under 30%. Another thing people use credit for in this country is if they want to buy a house. you want to buy a house, they're going to look at your income, they're going to look at your credit. And the same thing, like I said, with a car, the better your credit, that means if you're in the excellent club, you get better interest rates. If you're not in the excellent club, you're in the good club, or you're in the very good club, you're going to get good rates too, but not as much as in the excellent club. But these things help you. This is leverage. When you have good credit, you're in a position of power. And this is the best position you could be in if you want to take out a loan, because you're more trustworthy. Uh, the banks see you as low risk. They see you as someone that has been responsible based on your credit history that you've been building up. So this is something very important. Most important things in this country, everything that is important in this country has to do with credit. Like when it comes to finances, your credit is gonna be checked if you want to make any move. Even if you want to take out a personal loan, they're gonna check your credit. If you want to take out a loan to start a business, let me just say that the business is just going to be in your name. You need like a business line of credit for an LLC you created, or let me just say another business, and you want the bank to give you a business loan. Your credit is going to be checked, and the better your credit, the better your interest rates. The like the more power you have to negotiate with them. So those are very important things. That's just like the first part I wanted to tell you guys about. And then obviously when there's side A, if you're responsible and you're accountable and you pay your bills on time, that's going to be good. Same thing to the side B. If you don't pay your bills on time, interest is going to occur, and then there's a record of everything. So that's going to show up on your credit that you don't pay your bills on time. And that's not good. The more you don't pay your bills on time, that takes you from like excellent to like good, or maybe like fail poor credit, depending on how late you're on your bills. How late you're on paying your credit card. Then if you have student loans, like let me say you come here, you go to school, you take out student loans. Normally in America, after 6 months, you have to start paying back the student loan company. There's a certain amount you have to pay. It's different programs, but let's just say whatever amount you have to pay per month. If you don't pay that, you're gonna the student loan companies are gonna report that to your credit, and then your credit too is gonna drop. Child support as well. If you don't pay your child support, it's gonna drop your credit. If you have credit cards that you're using, and then all of a sudden you stop using those cards, never cancel them. If anyone is to cancel a card, let the credit card company cancel it, because if you cancel it, it brings down your credit. And when you have bad credit, it's going to take you anywhere from 5 to 7 years to fix your credit. That means even if you go ahead and pay, those things take like 5 to 7 years before they drop off from your credit. And that's a very long time. That's going to hold you back. Imagine you want to make a big move, you want to purchase a house, or you want to live in a nice apartment complex. You just want to do something for yourself. And imagine that you have everything except good credit. That's going to hold you back. So you don't want to get caught up in this. You don't want to get caught up in this circle. I know life happens, but take credit very seriously from day one and make sure you just pay what you have to pay back. Because if you don't, it's really, really brutal, and it's really hard to build your credit back up. It's really, really hard to build your credit back up. And another thing is medical bills. If you go to the hospital and there's a certain part of your medical bill that your insurance doesn't pay, and you don't want to pay them, because this company's what do you call it? Yeah, you go to the hospital, insurance does not want to pay a certain bill, and then you get a bill saying that you're responsible for this part and you don't pay it, and they keep reaching out asking you to pay it. After a certain time, anywhere between 6 months to a year, they're going to report down your credit, and it's going to show up in your credit, and it's going to mess up your credit. So if you see that an insurance company hasn't paid, and you check with them and you ask them why they haven't paid, and they really tell you, even though you want to continue arguing, you got to be very careful, because if that gets on your credit, it's going to drop your score again. And once it drops your score again, it's just problems.